The FBM KLCI rose today as trade volume and value across Bursa Malaysia closed up at all-time highs, while rubber glove manufacturers climbed to record peaks amid lingering COVID-19 pandemic concerns. At 5 p.m, the KLCI finished up 0.21% at 1,575.94. Trade volume swelled to 15.62 billion units, valued at 10.45 billion ringgit, with gainers outnumbering losers 608 to 514. Top gainers include Supermax Corp, up by some 16% to 22 ringgit and 42 cent, and Top Glove Corp, which rose by 5.5% to 28 ringgit and 36 cent. Among Bursa indices, the FBM ACE was the top percentage gainer after the gauge closed up 5.27%, followed by Healthcare, which climbed 4.79%, and Technology up by 3.33%. Equities tracker head of research Lim Si-cheng told The Edge the index's performance was mainly on account of rubber glove stocks. That said, it is still a two-tier market where pandemic-related counters are performing as compared with non-pandemic sectors. Hartalega Holdings reported a 134% jump in first quarter net profit to 219.7 million ringgit as both rubber glove sales and average selling prices rose. Lower raw material and energy costs, coupled with the group's operational cost control initiatives, also helped. Top line stood at 920.1 million ringgit, up 44% from the previous year. Hartalega is optimistic about its longer-term prospects. It believes demand for gloves will continue to grow in the coming years due to the COVID-19 pandemic. New cases aside, it says the sector is expected to undergo a structural step-up in demand as usage grows in emerging markets with low glove consumption and heightened hygiene awareness. The glove maker sees the overall projected growth in demand outstripping supply in the next few years. It will continue expanding its capacity and aims to grow it from the current 39 billion pieces per annum to 44 billion by FY22. Lawyer Tan Sri Shafee Abdullah suggested today that the 1MDB management was run by a bunch of idiots in regard to the deals it had made with Aba Investments PJS Limited or Aba BVI. Aba BVI is the company which 1MDB paid $576.9 million to as security deposit for a corporate guarantee. As it turned out, the company which Shafee referred to in court today as Small Aba was in fact an outfit incorporated by Loh Teck Joe and his associates in the British Virgin Islands. Shafee, who was cross-examining former 1MDB CEO Datuk Shahrul Azra Ibrahim Halmi, said 1MDB's management had time and again fallen into cobra pits when it came to deals of such nature. Shahrul maintained that 1MDB had no reason to be suspicious of the Aba BVI deals since Abu Dhabi-based IPIC, a subsidiary of the real Aba, had also been involved via IPIC's then MD Kadim Al-Kubaisi and then Aba CEO Mohammad Badawi Al-Husseini. Shahrul added that Goldman Sachs banker Tim Leisner, who was heading a team in 1MDB as its financial advisor, should have done due diligence on this deal. Proton Holdings saw sales surge to an 8-year high for the month of July on the back of tax incentives offered by the government and rising consumer demand. The national car maker sold 13,216 vehicles, marking its best sales month so far this year and its highest monthly sales volume since June 2012. Overall sales in July grew by 37.3% month-on-month and 45.7% year-on-year. 4 models, namely the Saga, X70, Persona and Exora, achieved sales leadership in their respective car segments. According to Proton ADA CEO Roslan Abdullah, the encouraging sales also led to a monthly increase of 100% in the number of loans disbursed by in-house vehicle financing provider Proton Commerce. Year to date, Proton's market share as at July stands at a forecast 21.8%, a growth of 6.7% over the same period last year. Fraser and Neave Holdings says third quarter earnings shrank by 18.4% to 93.85 million ringgit as consumer demand took a hit from the COVID-19 pandemic and the ensuing movement curbs. Revenue contracted by 13.9% to 918.1 million ringgit as income fell at both its Malaysian and Thai operations. For the cumulative 9 months, net profit stood at 324.39 million ringgit, down 5% from a year earlier, while revenue slipped 2.2% to 3.03 billion ringgit. F&M Malaysia said it has seen gradual improvement in sales and stocks movement since the easing of MCO restrictions in May. The curbs, which were previously imposed on dine-ins, had significantly hurt sales to hotels, restaurants and cafes, as well as convenience stores and general trade channels. On the whole, F&N says it is seeing tentative signs of recovery in demand in Malaysia, Thailand and some of its export markets. It is cautiously optimistic that sales in the fourth quarter will be better than the previous quarter as economic activities gradually normalise.